Welcome to reporting pension and IRA distribution income. Pension and IRA distributions are normally reported to the client on a 1099-R, which looks typically like this. So it'll have the payer's information, their federal ID number, the recipient, which would usually be the taxpayer or the spouse, the gross distribution, which is the amount that they receive, and then in box 2A, it'll show of that amount how much is actually taxable that you have to include in your taxable income. And then 2B, you might have a total showing total distribution, or you might show that how much of this is, if it's not taxable, how much taxable amount not determined. So in that case, the client would have to determine of box 1 how much should be taxed. Box 4 will have federal taxes withheld. Hopefully there's something there because this money is going to be taxable to them. And box 12 also would be state withholding. Typically they have to pay state income tax on this money. Box 7, this distribution code is going to tell us how the money was pulled out. Was it pulled out before retirement age, after retirement age, or due to disability, or maybe they pulled out early but there's an exception to being hit with a penalty, because if they pull it out before retirement age, the IRS will hit them with a 10% penalty. So let me demonstrate now. I'll show you where to key this in Drake. So I'm in the General tab of Drake. Then right here where it's labeled 1099, 1099R retirement, I can left click and go right in the screen, or I can type 1099, whichever is faster, at the bottom, hit enter. Come into the 1099R screen, all I'm going to do is take the information off the 1099R, the client brings in, and enter it into this screen just like a W-2. So the very first flag field is a taxpayer or a spouse. I need to specify whose income it is. I'll say taxpayer. Usually the F field you don't have to do anything with. Pension type. This one I'm going to put in typically whatever the distribution code is that's down here in box 7. I'm going to put the same up here in pension type. And I need to do that because the state of Michigan does not tax all pensions, and it's identifying which is not taxable based on the distribution code. So we have to put it in here in order for Drake to properly subtract it out if it's not taxable. So if it's a distribution code 1, I'll put a 1 up here. I'm going to put the federal ID number of the company or the payer. I'll just put X tax here and say it's 25,000 is what I received. Of that, only 24,000 is taxable. I'll check the box. It was a total distribution, meaning I received everything out of the account. Say they withheld 2,500 in taxes. And then typically the next field, there'd be something in distribution code. That was a 1, I said. And if you look at the drop down, the code's early, that means an early distribution. No known exception to the penalty. So this person's going to get hit with whatever tax bracket they're in, excuse me, for the taxable amount, plus they'll be hit with a penalty. Then I come down here to the state withholding, say they withheld $1,000, box 12, from the state of Michigan, and then the state distribution amount. Okay, and then usually city, you don't have anything in there. Let's go ahead and Control V to view this return. I want to go ahead and view the 1040. I'll show you where it shows up on the tax return. Line 16A, pensions and annuities. I received a total of 25,000 from this, but only 24,000 taxable. That gets added into all my other income. And on the back side here, line 59, other taxes, no known exception. There's a penalty, 10% of the taxable amount, so that's 2,400 additional tax I'm paying as a penalty being added to overall my tax. So I go back and hit escape, takes me back into data entry. So now I'm going to switch the distribution code to a 7, and a 7 means a normal distribution that I've taken the money once I hit retirement age, and I'll change it up here in pension type field too. I Control V. As you notice, my refund went up. And look at the 1040. So now again, it's the same amount. Everything's the same, except now I don't have a penalty of 10% on line 59 because now I've reached retirement age. I'm doing exactly what the government wants me to do. Take the money out, pay my fair share of taxes on that money because it's never been taxed before, but they're not going to penalize me. Two other distribution codes I want to point out. Code 2. So I'd switch it up here, also code 2. This is going to be early distribution, so I'm pulling it out before retirement. However, there's an exception that applies. So typically, when you have a code 2, they're pulling it out before retirement age. Maybe they retired early from GM or the state, and they're not going to hit them with a penalty because they really are retired. That's why they're pulling the money out, but they had an exception by retiring early. There was a special offering maybe by the company, so they're able to do that. The other code I want to point out is number 3, code 3, which is for disability. So that the client, the taxpayer, the spouse, they're not able to work anymore, so they're able to pull money out early from retirement because now they're disabled. So it's really somewhat of a disability pay. They're not going to be subject to a 10% penalty. They're not able to work anymore, so the government's allowing them to take the money out. They have to pay the taxes on it, like always, but they're not going to be subject to a 10% penalty. And one other thing you have to remember, down under here, under where it says additional information for this distribution, if it is for disability and this client is eligible for the earned income tax credit, which is discussed in later chapters, you may want to check these boxes and treat the 1099-R for disability treated as wages, because if there's wages, they may be able to get a larger earned income tax credit, but if you don't check the box, treat as wages, they will not receive a larger earned income tax credit. So it could hurt them, or most likely it's going to help them. But you have to remember, if it's a code 3, it may help them to actually treat this as wages. And if I do this, I do a Control V to view my return. Where it shows up on the tax return now, instead of being down here in line 16B, now it's lumped up here in line 7 because it's treated as wages. It'll even show it right here, see statement 12. It's going to explain why we're doing this, and it's coming from the 1099-R. But the only reason we would do this if it would increase their refund, and it's only going to do that if they're getting earned income tax credit. That's all I have regarding reporting 1099 income on the tax return. Thank you.